talk a little bit about what's been happening over the
Right, we're jumping straight in. The 5ers right now. Let's go. CEO.
last
Here we are.
couple of days over the weekend, and then we can get in and we can
Yeah,
speak about
absolutely.
some of the main questions and clear things up.
Thank you, Alex. Yeah, it's been a very busy weekend starting Thursday night since we start getting all the rumors and the vague announcement by MFF.
Yeah.
And then started all the rumors, the commotion, and we feel that during this weekend we went on Twitter, on X, and we get so many questions by so many people, and we feel that the amount of confusion and the curiosity about what is behind the business model of the 5ers and the proprietary trading space in general is it came to be something that is crucial and very important for many. And we hear a lot of discussion, we read a lot of social networks discussions, and it's just we feel that maybe it is time for us to step in and help everyone calm down and pretty much understand. So what we are trying to do today is we're going to address your question. We ask a lot of people. We ask you in our post to send us your questions so we know what worries you, and we're going to address this. We want it to be fully transparent and to talk as much as possible about the business model in principles. We're not going to reveal specific numbers and talk into the details and the specification of the 5ers. But it is important for us, for you to understand and feel comfortable and fully understand what kind of business you are partnered with when you're trading with a proprietary trading and in general, and with the 5ers in particular, because we feel that the 5ers represent something more unique in this general space, and we'll talk about this as well.
Yeah, I think it's a long time coming as well, because with so many people running into this space, because this space gives a lot of opportunities both for the trader and for the people that are obviously running different types of firms and different types of models of firms. So there's opportunity for a lot of people. So I think I'm happy that we can get to clear things up. So what I'm going to do, on Twitter, we asked a lot of people for some questions. I've taken those questions, I've put them in for Gil, and then afterwards, once we've got rid of most of those questions and we cleared everything up, then we'll go and have a look at some of the other questions that we might have missed out.
Yeah, but before that, Alex, I would like to maybe take 1 minute to make a proper definition of how we see a proprietary trading fund operates, because we've been the pioneers of this Forex proprietary trading. Actually, I don't really like the definition proprietary trading. I think we are funding traders. Proprietary trading has a total different meaning, but since it was taking for our industry, let's just use it. But anyway, I want to, when we started this business, what we had in mind is that we want to create a fund, and around the fund, and this is how we operate until today. And so we are created a private equity fund, which is...
Mate, I can't lie, he is slipping up, this CEO. It's his own business, and he doesn't even, it's not even on the top of his head. What are you?
Our resources capital, and we are seeking talented traders to work for us.
This is the model of the business.
So basically, the relationship that we have with you, the traders, is once you are funded, you are actually the ones that giving the service, not us to you, but you are giving the service of being traders for our capital. We are the clients. We are your client. This is why we pay you. And there's a huge misunderstanding about what is the proper relationship between a prop trading fund to its funded traders. And I'm saying this because this will explain in the next hour or so, where we answer some questions about the model, why we're doing things in the way that we do. And that will, I think, it's going to make more sense than it is for now. And it will take off some confusion that most of you are facing. So basically, we are fund. We're looking for talented traders to work for us. We've created an online platform for you to come and take the opportunity. That's the way it works.
So going off that, because I can add a little bit more, because that was actually the first question. First question was, what is the 5ers business model? So we kind of got into that already. I'll even put it up here because that is the first question. But
I feel like everyone knows the model of the prop firms. You know, you get funded, you trade their capital, you get a percentage of the whatever you make within that week, or the bi-weekly or monthly. That is the whole thing. Invest in small amounts of money to get big capital gains. That's the whole model of prop firms. It makes it a lot easier. Instead of you depositing into a live broker, you buy the challenge, you flip $100, which is 10k account. You get a 10k account. 1% of 10k is $100, and you go from there. You get 85, 95, whatever the percent of profit split is, you get at the end of the week, month, whenever the payout is due. That is a whole concept of the firm. Now, my Forex funds, if no one knows what's going on with my Forex funds, they were manipulating their spreads. They owned their servers. They had my Forex fund servers, MT4, MT5, very easy to buy on MetaTrader. Very, very easy. 10, 20, 30k a month. Okay, not too much money. Buy licensing, 100k. These prop firms making a ridiculous amount of money. Boom. The problem that my Forex funds ran into is that they were probably a legit business, or something happened, they got greedy, and they started wicking out people's accounts who are funded, making them lose their accounts so then they don't get paid out, manipulating their servers in order for them to make more money. That is the big problem. Now, with certain firms, they work with regulated brokers. For example, the Forex Funder. FCA regulated Think Markets, they're called. Think Markets are an FCA regulated, if no one's from the UK, that means it's the same as REF. They are regulated, full broker. That prop firm will have no say in what happens to the markets. They don't even touch any of that server account because they don't own it. They are working together, which is API configured over to the prop firm, the Forex Funder. Now, I'm not sure about Fiverr, and we're going to hear more about how their concept is, but I just thought I'd get it out there just so if anyone new watching right now, what's going on.
The way that, especially I've been here for 2 years, I've seen the 5ers grow, and I was looking from the 5ers for many years before that. And at the start, when we are looking for traders to become funded traders, they are kind of the clients at the start. Mm-hmm. We give certain programs to fit a certain style of that particular trader, but once that trader has shown that they are profitable, that's shown that they have an edge, the dynamic changes a little bit, because then we are kind of relying as well on that funded trader to continue with their edge to make profits for the company as well. So it kind of is, it's kind of both ways, because traders, funded traders, provide us with a service, but we are also looking for traders, and they're kind of our clients as well, in a way that we're providing opportunity.
Mate, this CEO is not liking this interviewer. Like, he's gonna get sacked because look, he's scratching his head thinking, what are you talking about? And I get where the interviewer is basically going, like, you know, we're making money both ways. If people fail, we're making money from the fail challenges, and if people pass, we're making money because they get profitable funded. And that's why his question said, it's actually quite interesting to see what this guy says.
They're coming to us and so on and so forth. But it's good that we cleared that up in the first thing, so everybody knows actually where everything stands. One of the biggest things I think that the situation with MFF was the fact that they were running a brokerage or something in the back end, that the front was a prop firm. And one of the biggest questions I'm getting on Twitter, Gil, and I've told you about this all day, is which liquidity providers, who's your liquidity providers, all of this stuff. And before we get into that question,
let's just get into it, man.
The model that MFF were running is very different from the 5ers and the model that the 5ers were running. So we've got to differentiate. These are two different
just quickly
entities,
put that out there, man.
especially with other prop firms or other funding companies in the industry. What was going on with MFF is not a direct reflection on what is going on with these other companies and with the 5ers. So that's another thing before we go into. But when I ask the question, or when we get asked the question, who is your liquidity provider, Gil? What can we say to that? What is your answer really to that?
Yeah, for a very long time, people do ask us who is the broker behind the 5ers, and we always say that we're using multiple liquidity providers.
Who?
And usually we don't disclose the names because it's our business edge. We have a very unique relationship with all these top tier liquidity providers. They are prime of prime brokers. They are highly regulated, but the reason that we
hold on, I'm so confused because I can just go buy challenge right now and see who they use as their brokerage. Why would they not release it? If you're on their website, surely they are showing who they're partnered with. Because that just seems so dodgy, man.
Work with this.
Answer the question.
Maybe
that's what you're here for.
To take a minute and explain the two models that were created in the past years in our immediate space, where companies that are working under the definition of online proprietary trading for Forex are working with. And there's I can distinguish two types of companies. The ones that have all the sophisticated technology for working with multiple streams of liquidity providers. And
he's actually ignored the question, by the way. Can I just say, like, you're doing an interview online on your own channel and you go, like, this guy's not going to like this, reacts, but the fact of the matter is you have just ignored the question. Who are you partnered with? You said they're FCA, you said they're regulated. Let's see it.
Ones that working with a singular broker. The ones that working with singular broker, what they do, they actually assign their traders into the infrastructure of known retail broker, and by that they have a very little control in how they manage risk for their own fund, which is reflect in the terms and that they can forward to their traders. The more classic legacy way to manage a fund is to have a pool account where you take all your funded traders into and give them the permission and allocations to submit traders on the fund behalf. And it is the fund management policy algorithm discrecy to
the risk management team.
To execute to whatever liquidity provider out there. So it's very complicated, and there's a lot of tech.
I can kind of make it a little bit easier.
And technology involved in this that we always work on it, but at the end, we are able to aggregate all these feeds and give the best of breed condition for any tick. So every time a trader of ours submit an order, he would get the best price, the best spread, the best execution, because we know how to route the order out there. So there's a lot of advantages to work with a company that do have this kind of technology. And I know that people would fear that if a company has control over the technology, they can do stuff like MFF used to do. So I would like to address that. At the end, when you are working with any partnership, it's about trust. And we're trying through the years, and we're 7 years in this business. What we care most is the trust and the relationship. We know how easy it is to be burned out by the discussion out there. We very much care about this, and we always monitor what's going on conversation out there. We are very aware and take it very personally when we have people unhappy with our services, if we have if we have some flaws. And so it's mainly a trust issue. And so if I mean, I cannot evidence on myself. It will not be fair. But if you go back and read the reviews, the happy and the unhappy ones, you will never see people claiming about slippage, which is something that is very noticeable. If we would play with
the thing is, what he's just basically saying is they have no control. That's fine if you have no control, okay? Like, it seems to me having your own server is a beneficial if you want to scam your clients. You need to have another broker that are regulated, working with you as an affiliate to partnership up and make your business secure. And that is probably what we're seeing now. Now, the 5ers, they haven't even told us what brokers are using, which is shocking, to be fair. It is shocking. And they haven't said anything. But what we have learned is that they are avoiding the real question, and they're just waffling on, just trying to save their own back and dissing MFF right now.
Conditions, it would be very noticeable.
I want to hold you back, because you're answering all of the questions that I wanted in one go. Like, every question that I have, you're answering absolutely everything. So I want to pull it back for a second, because we're talking about the liquidity, and this is something that is really important for the people. So I just want to make sure we have many liquidity providers. We don't give all of the names of our liquidity providers, because that is the business edge of the 5ers. Gil, from the time that he founded the 5ers, has been building up relationships with many different people to get some and to negotiate some of the best conditions that we currently have. If you go into the 5ers now, go into our website, go scroll down to the bottom, you have access to an investor, an account where you can see the spreads any time of the day. Now, we can only do that by having access and aggregating so many different liquidity providers to provide us with the best quotes at the best given time. If you just have one entity, like a broker, that is coming through a broker, obviously they do the kind of same things as well with liquidity providers, but you are stuck with that particular broker. Then the liquidity, we get the quotes, we get everything, and then from there, that's where you get your execution, and it goes to our risk management team that they balance the books and they are able to keep the fund healthy. Now this goes into the risk management more side of A book and B book. So I know everybody is shouting A book and B book, and I won't put words in Gil, because Gil obviously would talk about this, but when you are a funded trader at the 5ers, you are going into the overall account, which is then the overall book of the fund. Now, Ruben and the risk management team here at the 5ers, which I'm always bugging them and always talking about, and so I can talk a little bit about this, is the fact that they have to balance the book. So that's hedging. That's also, if we see a trader that is in a really good position, we may even go 150 or even 200% with that trader, so we can actually make more money on that particular trade. Some traders are different profiles that we can't go 100% into the market with them. We have to hedge or even put only a small. There's very different complex ways of managing risk on an overall book. And that's where it's not as easy as saying this person's on A book or this person's on B book, because it just does not work like that. You have an overall book of the fund that is managed by a group of people that do a very good job of it.
What's his answer to this?
But that goes to say for you, Gil, our traders using or trading simulated or real money when they're going through the 5ers? Because that's the question that a lot of people are going to be asking. And that's one of the questions that I have here.
It's clear as it sounds. When you're funded, you trade true, real funds. That's it. It's as simple as that. There's no. It's ridiculous to say that you would trade.
Yeah, but are they saying real funds in terms of if the trader is not profitable and loses 20k, is the company losing 20k, or do they benefit from them losing the account? And because what they're trying to, if you get a withdrawal, then the company's paying out. Yes, you are playing with true funds, but like the A book and B book is an avoided question again. What are they? It's not just one book. Are these demo on live servers, or are these live accounts which Fiverr are out their own money depositing into the account to fund it?
Simulated money where it's
in the evaluation, of course. Now, we have many different programs at the 5ers, and sorry I'm taking this over, Gil, because this is obviously your time to adjust and stuff like this, but it's important for me to say that we have many different programs in the 5ers. You have the hyper growth, which is the flagship, that this is what you brought to the industry. When FDMO came out, they came out with two-step, all demo, and the 5ers came out with the instant funding, live accounts, which you go through the evaluation phase. Now, we then came out with Bootcamp, which the idea from Bootcamp is because we were seeing so many new traders coming in that didn't really know that we were doing. We wanted to give them a cost-effective option for them to practice trading whilst getting funded. And that's why it's a 3-step program. That's why it is so cheap as an entry fee, so they can actually continue and get funded.
There you go. They're selling the package right now.
The main fee once they've actually completed everything, and then it takes it to the high stakes, which was our contribution to the competition that was already out there. Now, when people are talking about statistics and things like this, we have the flagship program, which Gil will talk about, which only really experienced traders go onto that program, and that program is a live funding. You do the evaluation and then you get fully funded, but you get the profits from day one. That is totally live. But all of the other accounts that we have at the 5ers, those are there to evaluate on demo, to see that you have an edge, that we can benefit from that edge when you go onto the funded account. The reason why people have commissions, the reasons why you've got spread, is because you need all of those things to see if the edge that you particularly have is an edge that works in these particular conditions. If we take a trader, Gil, we take a trader and we put them with certain conditions and then change it in a funded account, then we might see that the edge is no longer working, and then we basically
trading cost is part of the game. Trading costs need to be considered when you trade. It's part of how you manage the asset that we give you, the resource. Yeah. So you can avoid it. If you want to showcase what you're able to do, you need to simulate everything, including the trading costs.
Yeah. And I don't know what, because I know you've read the document as well, Gil, with MFF. They're a little bit out of touch with our industry. It seems like they don't know what our industry is about at all. And you can see that by they're talking about drawdown levels, and they're talking about we're putting things on traders that's how the funding industry is. So what do you think about that with regards to the regulation and the documents and everything that came out for MFF?
Yeah, first, when I read the documents, it's clear that they don't fully understand the business model. They see proprietary trading environment as something that is bypassing the brokerage service providing. So it's like they look at this more as, and I think companies also present themselves like so. Like they would offer brokerage services with a layer of proprietary trading, and this is wrong. I think proprietary trading, and this is our approach, We are a fund. We're looking for traders to work for our fund, our capital in that fund. We're not reselling brokerage services. This is why we are not putting our traders into any specific broker, because we have our own pool accounts and execute the trades from that. So it's very clear and seen that the people that had composed that paper on the prosecution for MFF, they are looking for all these similarities of operating as a broker, but it's obvious because they also were operating a brokerage business. But when they were discussing the layer of the proprietary trading on top of that, they were amazed to mention they have like the 10% drawdown, which is designed to fail traders. No, it means that MFF wanted people to rig their risk to up to 10%, and I think that's right, but it's clearly show that they don't fully understand the business model. But having said that, I think a lot of people coming to this space as clients, as traders, also don't have the right expectation from what kind of service they are receiving from proprietary trading fund. They looking for this as an alternative for a broker. They expect the proprietary trading fund to give them a service like if they were depositing their own money on a broker. They expect service. They are the clients, which is not true. It's very important, and this is our opportunity to stress this out to all these tens and thousands, dozens of thousands of new people every month coming to this experience of prop trading, to understand that proprietary trading is a fund. You are a candidate for trading the fund capital. Once you pass the audition, you are the service provider, not us. Okay, yeah. But we provide the platform, so you have some rights in it.
I know a lot of people are still hung up on the liquidity provider. I can see it in the comments and things like that. Now, Gil, I know that you've built those relationships up for a long time, and I know you're very proud of those relationships, and I know that is the business edge. Can we disclose one or two or even three of any of our liquidity providers?
Come on, this is what we're here for.
Clear things up.
People want to know.
Yeah, we'll discuss this before, and we know that people worry, and because of it's special times, we were willing to disclose who we work with, and in some cases. So a few names: it's Interactive Brokers, Saxo,
Saxo Bank, that is.
Saxo Bank, yeah, Ice Prime, and we have more. We work with 6 or 7. We always have some rotation. We take some, we bring some in. It's always it's a dynamic thing. So we have more prime brokers that we work with, but these are
all regulated brokers, just to make sure that people that may not know them.
Sure.
Yeah, everybody in trading.
They're basically saying this, right? Because MFF wasn't regulated. Obviously, they're on their own servers and they're providing a service.
Prime brokers, just providing services to institutionals and commercial clients. Yeah.
And that leads us on to the overall thing is, obviously, where do we see the regulation going in the future? Because even though some of us have been in here for a while, the industry as a whole is still in its infancy. Prop funding and funding companies, it's still quite new in retrospectively of everything. So where do we see the regulation coming in? And let's say if we're looking at 10-year horizon, where do you feel that's going to go, and where do you think the 5ers fit in that whole span of regulation that's going to happen with the industry?
I cannot predict.
Big question. Big question.
I know what is my wishful thinking. I wish for regulation, not because I think we we should be regulated. It's because at the end we are servicing thousands of retail traders coming to us as alternative. It wasn't the intention when we've created this this structure of business, but eventually we realized that we deal with a lot of retail traders at the end of it, and they expect service. And as service provider, we want to have some standards of ethics, and because it's a business of trust, like I mentioned before, it's very important for any regulator to come and protect the interest of the traders in this. However, having said that, I think it's going to be very complicated for regulators to step into this business, and just because of the reason of what is the business about. We are a fund, a private equity fund, and we have the obligation to do whatever we want with our resources. I mean, we can hire any people, do anything on our resources. It's our duty to be profitable or not. No regulator can tell us if we can invest our money in one way or another. Regulators are there to protect clients' money, clients' resources, so they will not be fraudulent. And the issue with MFF was mainly because they created this broker business behind it. And since we are not,
they shouldn't have done that,
it's going to be very hard for the regulators to impose regulation on us. And another aspect of this is that Wall Street and every...
Mate, what is actually wrong with the My Forex funds, like, owner? Like, honestly, you have a great prop firm. You know, everyone, you was doing numbers that no other prop firm's seen, up and coming, XYZ, and you just go and scam people. Like, what's even the point of that?
The financial districts in every main capital city in the world, they have a lot of private equity funds working with their own funds and with their own workers. If they will need to regulate us, they will need also to regulate them. And there's no particular reason why they don't have the interest to protect their employees. So we are working with employees. You are, the funded traders are our employees by contract, by third-party contract. It's pretty much the same structure. However, because we are serving different scales of numbers of traders, and because the majority of our traders are intermediate and up in their skill level, this is why maybe a regulation should be considered, but it's going to be very tough to have the reasoning why to structure a regulation on this. So as long as the companies will not, I mean, we are not, but some other companies, I don't think they quite understand their own business model. As long as we're not bypassing and remarketing brokerage services like some do, then nothing is being done wrong, and then regulation will be hard. However, in terms of ethic, in terms of our dignity and the safety of our traders, I wish there was some kind of structure that will help us define a true ethics, a public ethic that people will feel more comfortable when they are coming to work with us.
There needs to be a little bit more, a bigger barrier to entry to the industry, and that's the issue.
Basically, they're gonna say it's too easy to open a prop firm and stuff, which you could say it's true, but just because you have a prop firm business doesn't mean it's gonna grow into great things. You know, it's a lot to do behind the scenes, how you market it and stuff like that. And also, you can't grow a prop firm without proving that you're legit by paying out your members and, you know, your funded traders making that withdrawal. So I understand what they're talking about. They probably just don't like seeing the amount of prop firms that have opened up.
Issue that we've always spoke about is
Yeah.
Anybody at the moment, it's a little bit like we have a little bit of a running joke at the moment in the office, which is a little bit running a Shopify dropshipping store, where anybody can open up, they can go and they get approached all the time, influencers to open up shop, by people that can offer infrastructure at a price, and everybody's undercutting everybody, and they don't understand the base and the foundation that needs to be there to run a successful, healthy fund, to have a successful, healthy book, and to actually be able to go through the years and still be able to do what we're doing. And obviously, evaluations, people pay for the evaluations. You're paying to get tested, to then get funded. Now, we would love to find massive amounts of traders all the time that can come and get funded and to trade as funded traders. That was your dream. For people that don't know, you can look at one of the interviews Gil did when he was talking about the foundation where he founded the 5ers. The idea is you went with your friends to start up a small trading together, a group that you wanted to trade together, correct? You wanted to trade together and make money together on the markets and to do it as a community. Unfortunately, half of your friends decided to get on with their lives and focus on something that wasn't trading. Maybe it was a little bit too difficult, but you took that and you went to find other people that maybe weren't in Israel, but they were in other places around the world to trade with them. And that's how the 5ers was born. It was born about trading and building up community together. And that's losing a little bit my train of thought there, but at the end of the day, regulation does need to come in just to make that barrier to entry a little bit harder. But at the end of the day, the 5ers, it's a private funds. These are funds that the 5ers have that traders are contracted out to trade the fund. And it's very hard to regulate something like that because we're taking the risk. You put that risk to build up the fund from scratch. Traders have come in over the years to trade and make money on the book for us. And evaluation money, which is the point that I wanted to get to, that does go into the fund. Not everybody passes, and that is a well-known thing, that the money that goes for evaluations, not all of the money, not all of the traders pass, and that money is a revenue stream as well into the 5ers that Gil will talk about as well. But we have an office, and I'll let you go into that, Gil.
Yeah, I want to continue your line of thoughts about
okay. So,
about the admission fee, where we get a lot of question about this. I think a lot of traders, they look at prop trading shops and they say, okay, they earn their money from the evaluation fees, and so there's few aspects to this. First, I don't know if you remember, Alex, like 3 years ago, we did a free program. We called it Summer Plan. Summer Plan. Yeah. We had overnight 10 times traders in 2 weeks than we had in a full month.
Yeah.
People, when traders come with no skin in the game, it's an issue. People don't have the responsibility to actually invest the time. We know trading is a hard time, is a hard work. It's very counterintuitive. You need to be in the zone in a consistent way. Not every day you have the same vibe, the same mood, the same everything. You need to be very, very zen person to do it every day, again and again. And if you give free chance to everyone, you're not necessarily going to find the talent people. You're just going to get into your business a lot of noise and a lot of people that will abuse the opportunity, and some people will be lucky and you don't know it. So first, people need to pay for evaluation. That's one thing. The other thing, is that the evaluation phase takes about 80% of the efforts in the office.
Efforts
So
is
much,
in, we're
so
talking
much
about the efforts
resources.
is in
Yeah,
time, resources, development, everything. It's,
marketing, everything, competition, everything.
yeah.
And lastly, because people do pay for the evaluation, that allow us to create a better and more rewarding programs. Because imagine that if we would need to take the full risk with no backup, just forget about the commitment that I said about taking responsibility and not being fully risk free when you take the evaluation. Once you get funded, with 20 times more than you actually paid, and the risk that we're taking on the traders are enormous. If we don't have that income at some point, we cannot give you the opportunity with the leverage that we give you and the initial balance that we give you. It's all come to down. It's all come to summarize and to
Yeah.
into a calculation for the overall program with all the feature and objectives that we have in it. So I know some people have questions if we make our profits from evaluation, but at the end, first, and one more thing, it's very important for you as a trader to know that you are working with a company that is profitable, because if we weren't profitable, we wouldn't be here,
Yeah.
and you wouldn't have the opportunity. And then what you need to look up is what is the amount that you put in versus the opportunity that you're about to accomplish. And if you look at this, it's still a bargain. If you put the numbers, if you calculate the alternative
The initial
that you
investment,
have
yeah, for sure.
outside the proprietary trading space, then it's still a very bargain
I think
opportunity that you
one
have.
thing that I want to add, and I want to cut you there, Gil, just because I want people to understand that the 5ers is bespoke in the way that we have teams of developers that code and customize absolutely everything from the dashboards to the websites to the system flows to absolutely everything. You've got teams of support. You've got absolutely so many overheads. We have an
What you're
office,
trying to say is the company's
lot
got a lot of
staff.
infrastructure.
And if we were relying solely, obviously, on trading, then we probably wouldn't be as big. But that comes in as like a big circle. At the end of the day, when we look for traders and they do the evaluations, if they don't pass, that goes to cover certain types of things of overheads. But there's many different things to make a business healthy, and Gil can probably back me up because he's the business mind here. But you need multiple streams of income. We have obviously the trading, which is managed, it's hedged, it's a very healthy book. We have the evaluations, and all of that goes. We also have partners with different platforms and different people, and it all goes together to create a mutual beneficial partnership with our traders and with ourselves. And I'm also a trader. Without prop firms, to make money in trading, you need money. And unfortunately, people have the skill in trading. They don't have the money,
The equity
to optimize their skill, to kind of change their conditions or to take them onto the next level.
You guys
I think
doing a
prop
good job
firms are
though, to be
amazing
fair.
for this
Doing a good job.
opportunity. And people need to not look at what has happened with these particular companies, that they are in the US and in Canada, probably the worst places in the world that you can be a broker and not claim to be a broker. If you're doing that in the US and Canada and pretending to be something else, but really you're a broker, you're kind of asking for trouble. Now, I know
I
there's a
want
couple of
to,
questions. Go on, Gil. You go
yeah.
through that, and I'll read some of the
I think we
questions and
spend a
go
lot
through
of
everything.
discussion about the admission fee because we have a lot of questions about it. But it's very important to say that it's not the business model. The business model is, after all, is to make profits with the traders, with the traders' skills, being able to leverage traders with more funds and to execute profits from skillful multiple traders at once. So that's part of it. We are able to also, because we have risk management and because we have our proprietary technology with our pool and bridge, is to optimize our profits. And the more sophisticated that we are, the more professional that we are in our risk management, is helping us to be more profitable. So the more profitable we are able to be more competitive with other companies offering. So this is a very complex business model where you have many streams feeding you. And
All right, we've watched 46 minutes of this stream. It's probably ending soon. He's talked about everything that he's had to talk about with his own prop firm, what they actually are doing with their business model, what providers they're using for other traders to trade, or their traders to trade with, in terms of their brokerage, where they're getting the quotations from their trades. So, you know, 5ers are basically saying, you look, we aren't like MFF. I think MFF, I pray to God other prop firms aren't doing this. I ain't gonna say their name, but I've got a prop firm in my head that I've traded before and consistently slipping out, just like MFF. So keep note of that. Like and subscribe if you are new. Check out the Forex Thunder or 5ers. Just thought I'd plug it in. But yeah, thanks for watching. Catch you in the next.